Coming up on Global Business, urban momentum, State Council emphasizes unleashing domestic demand via new urbanization in a meeting chaired by Chinese Premier Li Qiang. Market moves. Across the board, advances were seen in Asian stock markets on final trading day of 2023. We break down the numbers. Report card, and we present a comprehensive regional economic review from our reporters across the world. Good evening from Beijing and welcome to this edition of Global Business on CGTN. I'm Lily Lu. Chinese Premier Li Qiang convened a State Council meeting on Friday to deliberate on strategies aimed at advancing a new form of urbanization. During the meeting, emphasis was placed on the integration of rural migrant populations into urban areas, with a focus on further reforming the household registration system to ensure equitable access to essential public services for individuals without permanent urban residency. The government plans to bolster investment in sectors such as education, healthcare, elderly care, and housing to facilitate this goal. And these measures are intended to stimulate consumption and investment, enhance people's well-being, and foster social fairness and justice. The State Administration of Foreign Exchange has released a report on China's international investment position as of the end of September 2023. The data reveals that China's international investment position remains strong, with a growth in net external assets. China's external financial assets amount to approximately $93 trillion, while external financial liabilities are around $64.4 trillion, that is. In addition, more than half of external liabilities are linked to direct investment in China, totaling $3.3 trillion, showing a slight increase from the end of June 2023, which also indicates that China remains an attractive destination for long-term capital from overseas. Tourism in China this winter is heating up as the three-day New Year holiday approaches. Culture and leisure trips, ice and snow activities, and hot spring tours are the most popular choices. Data shows the total booking for domestic tourism have increased more than 3 times compared to last year. The travel demographic is getting younger, with 89% of the tourists born after 1980. The National Immigration Administration forecasts a surge in the flow of inbound and outbound passengers during the New Year holiday. China's recent extension of visa-free access to more countries is expected to facilitate arrivals, and a daily average of over 1.5 million inbound and outbound passengers is expected. With 3 days left until the arrival of 2024, shoppers in Shanghai are already immersed in the holiday atmosphere. Local malls have launched festive promotions in the hope of attracting consumers. Cheng Tong has more on the early holiday shopping craze.
Despite the New Year still being a few days away, the dining area at this Shanghai shopping mall is already bustling with early holiday cheer. This restaurant has launched a special menu for the occasion, and the business is strong.
During weekends, most of our customers are families such as parents with their kids. During weekdays, we welcome white-collar workers from nearby office buildings. Sometimes they need to wait between 30 to 40 minutes during peak times at noon.
Beyond the restaurants, retail outlets are also providing discounts, and then customers are busy planning New Year shopping lists.
I will be with my family during the New Year holiday. I will go out to have dinner and do some shopping. Usually there are more discounts during the holidays.
I want to buy clothes and watches.
Since the end of November, this shopping mall has held activities nearly every day. Though Chinese New Year is still 2 months away, the vibe of the Year of the Dragon is already in the air.
Consumers are more professional and their demands more diverse. They're focusing more on personality and quality. So in addition to providing shopping areas, we're working with shops to provide more experiences, services, and we're even setting up a shopping market.
This shopping mall is located in one of the hottest areas in Shanghai, the West Nanjing Road. Nearly all the stores and malls along the road are ready to welcome the new year, offering promotions to attract consumers to buy. Chen Tong, CGTN, Shanghai.
The Asia-Pacific region is expected to experience growth driven by China, Japan and India, despite facing global challenges. The IMF has revised its projections downward, citing a disparity from pre-pandemic forecasts. In contrast, the ADB is optimistic about the robust growth in developing Asia, especially fueled by China. And this positive outlook comes as the second anniversary of the RCEP signifies a transformative period in global trade. Mira Liu in Singapore provides further details.
Despite a challenging global environment, the Asia-Pacific region remains a relative bright spot. In its October report, the IMF expected growth in Asia-Pacific to accelerate from 3.9% last year to 4.6% this year. This is largely explained by the post-reopening recovery in China and stronger than expected growth in the first half of the year in Japan and India. While Asia is still set to contribute about 2/3 of all global growth this year, the IMF noted that growth is significantly lower than what was projected before the pandemic, and output has been set back by a series of global shocks. The International Financial Institution has since lowered its estimate for growth next year to 4.2%. Closer to home, sentiment is slightly more upbeat. The Asian Development Bank said in December that developing Asia will likely end the year on a brighter note, with growth in the region expected to be stronger than previously thought, due mainly to a recovery in China's economy. The ADB raised its 2023 growth forecast for Asia to 4.9% from 4.7% projected in September, but kept its growth outlook for the region at 4.8% next year. As we march into 2024, the world's largest free trade deal will celebrate its second birthday. The Regional Comprehensive Economic Partnership took effect in June this year for the Philippines, confirming that the RCEP agreement is now in effect for all 15 members. The mega trade deal was signed in November 2020 by the 15 Asia-Pacific countries after 8 years of negotiations. It entered into force on the first day of 2022, creating the world's largest trading bloc. In the first quarter of 2023, China's total trade with the 14 other RCEP members grew by 7.3% year-on-year and accounted for 31.2% of China's total trade during that time. Based on the Brookings Institution research, the RCEP agreement is expected to enlarge the global economy by adding $200 billion annually to world incomes and $500 billion to global trade by 2030.
And still to come here on Global Business, we present a comprehensive regional economic review from our reporters across the world.
The world economy as we know it is about to change. Global Business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
Welcome back. As 2023 draws to a close, the enduring conflict in Ukraine continues to exert a negative impact on economies worldwide. From Germany, Natalie Carney provides insight into how the nearly 2-year-long conflict has affected the European Union's largest economy.
It's no secret that the conflict in Ukraine has weakened economies across the European Union. In many ways, Germany has been affected more than others. In 2022, the first year of the conflict, Germany's GDP shrank by around 1.8% compared to 2021. And this year, it is expected to shrink by 0.3% as high inflation and rising interest rates take their toll on the economy.
There is a massive cost for Germany for a number of reasons. High dependence on gas, oil and coal from Russia, the impact on energy costs, slowing demand in Europe, lower exports for Germany, then of course confidence. Companies investing less, consumers consuming less because of very high inflation.
Energy prices increased dramatically in 2022 as the country quickly diverted imports away from Russia to other, more expensive suppliers, while inflation hit nearly 8%. But federal subsidies of around $44 billion have since helped bring those numbers down. In addition, Berlin has initiated a $110 billion defense budget to help beef up a historically underfunded army, while also helping fund Ukraine's own defense.
A giant Ukrainian flag was hoisted here in front of Munich's Palace of Justice just in the early days of the conflict as a symbol of Germany's support for justice in Ukraine. Yet Germany's support extends far beyond just that. Berlin is the second largest financial contributor to Ukraine's defense after the U.S.
Earlier this month, Germany's coalition government resolved a budget crisis that maintained the allowance to increase support for Ukraine next year. Since the start of the conflict, Germany has spent nearly $8.5 billion on military assistance to Ukraine and has budgeted for a further $11.5 billion in the coming years. Should more be needed, Chancellor Olaf Scholz has said the government would seek an exemption from borrowing limits.
If the situation worsens as a result of Russia's war against Ukraine, for example because the situation on the front deteriorates, or because other supporters reduce their aid to Ukraine, or because the threat to Germany and Europe continues to increase, then we will have to react.
Millions has also been spent to support Ukrainian refugees in Germany.
So there are about 1.2 million Ukrainian refugees in Germany today. More are likely to come, and also that has seen a spending of close to 10 billion euros on living expenses, on housing, on language courses, helping them to integrate.
While these economic measures have not stopped the German economy from falling into recession, they are, arguably, saving it from a deeper one and keeping Germany safe. Natalie Carney for CGTN in Munich.
As we speak, U.S. stocks will soon complete its trading for the year. It's been a turbulent 12 months on Wall Street. John Terrace reports from New York Stock Exchange.
Wall Street's Christmas tree is one of the best in New York. Arriving for work at 7 a.m. in midwinter, it sure cheers you up. Inside, much of the cheer came from the Magnificent Seven. No, not the cowboy movie, the Magnificent Seven tech stocks.
Alphabet,
Amazon,
Apple,
Nvidia and Meta,
Microsoft and Tesla.
You just can't bet against them. I mean, there's too much money that's flowing into them. People are making too much money on the returns right now, and the returns are outstanding for 2023. So until they reverse course, why get out of them?
But two in that list, Nvidia and Microsoft, deserve a closer look. Nvidia was one of the best performing stocks of 2023, briefly passing the $1 trillion market cap valuation after introducing powerful microchips for the AI space. AI was this year's big thing on Wall Street, though the Biden administration has banned the sale to China of some high-end AI chips on national security grounds. Meanwhile, Microsoft closed in on Apple as the world's most valuable company and secured its position as a major player in the world of AI by investing in OpenAI and its bot ChatGPT, and then rescuing the CEO, the AI guru Sam Altman, when he fell out with the OpenAI board.
Unlike the fascination with the metaverse last year, the AI is real, it's tangible, and it will produce significant results both for the companies and industries that use it and employ it correctly, and that may take some time to figure out how to do, and also for those investors that invest in it.
Chinese search engine Baidu, which trades in New York, launched an AI bot in 2023. Millions have used Ernie, as it's known, and it's credited with helping Baidu maintain revenue in the face of a possible advertising slowdown. Also worthy of a quick mention, Elon Musk. Never far from the headlines, he trimmed Tesla prices to stave off competition, unveiled the long-awaited Cybertruck, and managed to insult his advertisers at an X/Twitter public event in New York. One of the darkest chapters in 2023 was the regional banks. America is unique in having so many banks right across the country, and in 2023, some of them failed spectacularly. First to tumble in March was Silicon Valley Bank, based in San Francisco and designed to meet the needs of the tech industry. Word got out it couldn't pay all its depositors if it had to. There was a run on the bank as customers hastily withdrew billions. Signature Bank of New York went in a similar fashion, as did First Republic, also of San Francisco, and whose assets were eventually bought by the Wall Street titan J.P. Morgan Chase.
Well, there were 3 regional banks that failed this year, and one of the reasons they failed was because rates rose so quickly, so unexpectedly, that they couldn't keep up, and it caused panic. And when people took money out of those smaller banks and they took it out quickly, some of them couldn't survive.
Wall Street was also rattled by the collapse of the international banking powerhouse Credit Suisse, which had to be rescued by its Swiss rival UBS with the help of billions of dollars from the government of Switzerland. And so to the predictions for 2024. With the US presidential election season getting underway, multiple rate cuts are expected, with inflation continuing to decline.
I think the first couple months will be strong. I think we'll have about an average year.
I don't think as much hinges on the interest rates as it does the election. And that's going to be a bigger second half of the year story.
I would look for cyclicals, materials, energy, maybe to outperform tech, but that doesn't mean that tech is going to go down.
John Terrett, CGTN, on the trading floor of the New York Stock Exchange.
And now for more discussions on the 2023 economic data and the forecast for 2024, let's bring in our guest, Lu Mingyang, lead analyst at Tamarack Advisory. Hi there, Ms. Yang. So let's start with this. Which industries or sectors did you see the biggest or the most recoveries or rebound across countries and industries in 2023, and why? Ms. Yang? Well, I'm afraid we are. Okay, let's try again. Reaching out to Ms. Lu Mingyang, who is a leading analyst at Tamarack Advisory. And
yes.
Thank you very much. Oh, Ms. Yang. So let's start with this. Which sectors, industries did you see the biggest recoveries? Well, I'm afraid we lost Ms. Yang, and then we're going to try again later on in the program. First of all, let's take a look at this. In the past year, the strategic partnership between China and Arab countries experienced a significant growth following the Belt and Road Forum in Beijing. Agreements were signed by China and Egypt, Saudi Arabia, Kuwait and UAE, and Algeria, laying the foundation for projects worth tens of billions of dollars in the coming years. CGTN's Adel El-Marouki reports.
2023 saw growing Chinese-Arab partnerships. In October, the BRI summit saw China and Egypt sign agreements in the Suez Canal Economic Zone estimated about $14.7 billion to produce green energy and fertilizers. And just this month, Saudi Arabia's investment minister held meetings with Chinese industry leaders. 60 memos of understanding valued at $26.5 billion were signed. The two countries are expanding cooperation in the energy and technology sectors. The same growing partnership is happening in Kuwait, UAE, and Algeria. The Chinese brokered agreement in March normalizing ties between Saudi Arabia and Iran is restoring confidence that the Middle East can resolve its conflicts and accelerate sustainable development. The biggest project in the region is Saudi's futuristic so-called smart city NEOM. Part of the country's 2030 plan, the $500 billion construction, an estimated 33 times the size of New York City, is getting cooperation from China to help build technology infrastructure. NEOM is on the Red Sea's Gulf of Aqaba. Within an eyesight are Egypt, Jordan, and Israel. Already, Egypt's Sharm el-Sheikh is planned to include projects that will service this landmark city, what is promising returns and an economic push to the entire region. Adel El-Marouki, CGTN, Cairo.
Now let's try again to reach out to Ms. Lu Mingyang, lead analyst at Tamarack Advisory. Ms. Yang, are you with us this time?
Yeah, hi Lily.
Great. Hi there, Ms. Yang. Great to have you on the show with us. Now let's start with this. Which sectors or industries did you see the biggest recovery or let's say progress during 2023 and why?
I would say in general, the whole global economy is doing much better than we expected, especially compared to what we had been forecast before. So it has been a pretty good year, especially on the inflation side. And at the same time, if we look at different countries, let's start with the US. US is also definitely doing much better than our expectation, especially because the inflation was also under control by Federal Reserve's rate hikes. And that means like we are seeing like more recoveries across the industries, maybe especially near the end of the year, we're seeing more retail bouncing back compared to earlier time of this year. And at the same time, we're also seeing a pretty good, strong stock market compared to what we forecasted earlier this year. Like there could be major stock market drops, but instead we're seeing a 25% SP 500 growth, which is good news. And in China side, we're also seeing a pretty strong recovery bound in the later time of this year. The Q3 GDP growth is 4.9% compared to last year. And maybe not as good as on the retail side, but China is definitely coming back, and we're looking forward to more to come in 2024.
Now, the next question would be which sectors and industries were actually the laggards in terms of recovery during the past year?
I would say in 2023, small caps and emerging markets has been left behind. I'm personally still positive about both of them, but it's more like a long-term optimistic for both. And in the US side, we're seeing a lot of corporate bankruptcies and also corporate bond defaults. And it's at the highest number of recent years, but good news is that we're still seeing them much lower than the level of financial crisis time. And in China part, I will say China definitely recovered. It's more like it's imbalance in the system. It's still dragging. It's down. But in the new year, we are looking forward for China to gain more confidence in their foreign investors, because in 2023, it's the first year we're seeing net negative foreign investments, and we're hopefully in the coming year, it's going to change soon.
And also, let's talk about the Federal Reserve's interest rate hike. First of all, what do you think are the spillover effects? And now, more importantly, because now we are expecting the rates to start to come down, what are the potential implications?
So interest rate hike technically will cause capital outflow from developing countries like China, South Korea, etc. And that's because first, interest rate is bad for U.S. bondholders. And we know that China is historically one of the biggest U.S. government bondholders. And in 2022, U.S. bond was down by 30%. That's when China suffered a lot. And another piece of story is rising interest rate will causing a rising U.S. dollar. When U.S. dollar goes strong, that means the emerging markets will suffer because majority of their debt and also their sales contract signed in U.S. dollars. So it's harder for them to fulfill them. But the good news is in the incoming 2024, because Federal Reserve is already signaling multiple potential rate cuts in the coming year, we'll probably see that all those impacts got reversed, or maybe not all, but most of them. And that means we will have like emerging markets and small caps and U.S. bondholders like benefiting from the declining interest rate.
And also, Ms. Yang, as an economist, which geopolitical issues will you be closely following in 2024?
I will say in general, U.S. politics will still be a big player in 2024 for both domestic and also global economy uncertainties. That's essential because we have incoming presidential elections, which could have unpredictable consequences for geopolitics, trading, and also war in Ukraine and Middle East. And another piece of the story is U.S.-China relationship, because we're looking forward to see an improved communication between the world's biggest two largest economies. And since has starting to get better near the end of this year, but we're looking forward to see more discussions between U.S. and China on semiconductor export restrictions, and also U.S.-China tariff and potential Taiwan issues incoming.
And also, finally, do you think the U.S. will eventually fall into a recession as it has been widely projected in the year of 2024?
I will say no. Like a lot of big banks are predicting there could be a mild recession or small economy going down and coming out of 2024. But I don't really trust their predictions. It's because in 2023, they predict there will be a huge meltdown or huge recession. And obviously that didn't happen. So I don't really trust them 100%. But at the same time, because we're seeing the pretty optimistic note from the Federal Reserve about potential interest rate cut in the coming year, and since my step getting back to normal, but again, it won't be easy and it won't be smooth. We're more expecting it in a zigzag way, and especially to reach its 2% inflation target. And at the same time, maybe 2% is not realistic anymore, so we're still looking forward to the new number incoming.
Great insights. Thank you so much. That's Ms. Lu Mingyang for us. She's a lead analyst at Tamarack Advisory, joining us live from Seattle. And before we sign off, we'll share with you New Year expectations of some Beijing citizens. I'm Lily Lu in Beijing. Signing off for now. Goodbye.
Solidifying.
很魔幻吧
Hardworking.
Varied.
希望 diverse.
Memorable. Beginning.
Discovery. Better sleep. Hi everyone, we've had a great year coming back to China.
And we've had so many adventures so far, and who knows where we'll go in 2024.
What the year meant for the people around us here in Beijing.
I think that everyone was sort of getting back to work, China reopening. You got to go around and visit companies and industries and go visit a lot of people who haven't been in China for a long time.
2023年，我觉得最大的成就就是我们成功的举办了 Playoff， 也就是10项全能铁能赛，事业爱情双丰收。
Society is getting back on track with social events. Hopefully, work progress and international relations will continue as well.
我刚毕业的第1年，所以对我更多的挑战是找到一份心仪的工作，也是在这1年完成了这一个目标。
中国有句老话呢，叫做“前途总是光明的”嘛。
Maybe a romantic relationship.
期望我们的会员会越来越多，然后运动的这个理念也希望能带给更多的人。
A lot of traveling.
I want to pass the exam to become a real lawyer. Make more money.
And that's all for the year, guys.
See you in 2024.
Happy New Year.
Happy New Year.